There are a few key reasons for the recent surge in Ethereum's price. First, there's the broader market liquidity. Macroeconomic issues, particularly the rising expectation of interest rate cuts this year, have pushed up risk assets. Bitcoin, other cryptocurrencies, and even the US Nasdaq, S&P, and Dow Jones indices have been hitting new highs. This general market sentiment has definitely helped boost Bitcoin and Ethereum prices. Second, there's a new wave of buyers, especially for Ethereum. This new buying pressure is primarily coming from two places: US spot Ethereum ETFs. A significant amount of money has been flowing into these ETFs in the US market. Corporate investment, a new sector of publicly traded companies, has emerged, specializing in buying and holding digital assets as a treasury strategy. They call this sector Digital Asset Treasuries, DATS. These companies, like MicroStrategy for Bitcoin, are now focusing on accumulating Ethereum to boost their stock prices. For example, Bitmain, a company once known for buying Bitcoin, has now shifted its strategy to acquiring Ethereum. Another is SharpLink Gaming, a gaming company that was acquired by an Ethereum infrastructure firm and is now focused on accumulating Ethereum. In just 3 months, one of these companies bought 1.2 million ETH, which is roughly $5.2 billion, or 7 trillion Korean won. This is a massive inflow of new capital from the stock market, not just a simple shift of funds within the crypto market. The role of stablecoins and the halving. There are also two narratives driving Ethereum's price. Stablecoin utility. Most stablecoin transactions happen on the Ethereum blockchain. When a transaction occurs, a fee is paid in Ethereum, and a significant portion of that fee is then burned, permanently removed from circulation. This means that as stablecoin usage grows, the total supply of Ethereum decreases, which in turn increases its value. While this isn't a guaranteed linear relationship, as very high fees would push users to Layer 2 solutions, it remains a strong factor. Real-world assets, RWA, tokenization. Wall Street is increasingly interested in tokenizing assets like real estate and bonds on the blockchain. Companies like BlackRock are leading the charge. To do this, they need a highly reliable blockchain. With its 10-year history of uninterrupted operation, Ethereum is considered an excellent choice for institutions. While other blockchains exist, some, like Solana, have had network outages, making them less appealing for institutional-grade projects. Another point of interest is the recent news about Harvard University's endowment fund investing in a Bitcoin ETF. While it's a big headline, this isn't a new trend. All types of U.S. endowment funds have already been investing in Bitcoin ETFs. The Harvard news simply highlights a trend that's already in motion. As for the Bitcoin halving, its impact has diminished. In the past, the Bitcoin halving was the biggest event in the crypto market, setting a 4-year cycle for price movements. However, with the halving reward now much smaller and new institutional buyers entering the space, the halving's influence on the market has decreased, and the 4-year cycle is already broken. A note on the 401k and price predictions. While there's been talk of a Trump administration executive order allowing cryptocurrency investments in 401k plans, this isn't a new development. It was already possible to invest in crypto through a 401k, but required navigating many warnings about the risks involved. The new order might ease some of those warnings, which could make it easier for 401k managers to recommend crypto, potentially broadening its reach to a new group of investors. However, it's not expected to have an immediate effect on the price, as the changes will take time to be implemented. For Ethereum's future price, the common view is that it could reach $7,000, which would be a roughly 60% increase from its current level. Some experts, however, believe it could even reach $10,000. The key is that Ethereum's market cap is still lower than Bitcoin's, and its all-time high from 2021 is not yet surpassed, giving it significant potential for upside. However, a risk remains. While companies are buying up Ethereum now, they could also sell it off in the future, unlike MicroStrategy's don't sell policy for Bitcoin. If these DAT firms decide to sell, it could put downward pressure on the price. The following video discusses the recent surge in Ethereum's price, offering an in-depth analysis of the factors driving its momentum.